Good day, traders. Stacy Burke from Stacy Burke Trading. Today, looking at who's in the money. So each day, when I come to the screen towards the end of the Asian session, I will look at previous sessions, and I want to know which trades are still profitable. So when we look at the screen, even this morning into the rollover, we can see that last night there would have been traders short, possibly up at the numbers at 75. There's traders short yesterday in London, either on the break of a candle, at numbers, or somewhere in that area on a smaller time frame. But there are stops on all three of these levels, either above the highs of those swings, at the entry level somewhere in that area itself, depending on the time frame or the area they got in, and they may have either gone to break even or somewhat moved it down, so there'll be possibly trailing orders down on top of those highs. There'll be orders on top of these bars, but these are profitable trades. And immediately we see on the rollover, the market aggressively moves to stop hunt those trades. And the blue tracer, again, we talk about the previous day's highs and lows. Traders that would have shorted the high up in just heading into the Asian session, they had orders up there as well, break-even orders possibly somewhere in this range as well. And the concept I want you to grasp out of this is that the market will constantly go back and try and clear the board to make sure that nobody makes any money. And that may be a strange sort of concept. People say they make money all the time, but you want to be looking at which trades are in profit. And when those trades are in profit, so again, we look at Thursday, there's a big pin bar hammer after the stop hunt and the pullback. Traders that have gone in may have orders sort of around the 00 level down here. They'd have break-even orders maybe at the high of that candle if they traded the break. And traders maybe even who bought in the New York session down at the lows would have orders down here as well. These are areas where order pools will be built up, and that's liquidity that the market may come back at some point and fill and clear those orders. So by the end of the week, we may see that this whole level's been cleared out on the way back up. And you know, the fact that even this morning, if we look at this situation, the fact that they've already moved this market up 50 pips, there'd be some traders who have profitable trades possibly in this area on the break of that candle, so they've got break-even orders there if they don't take profits, and they will also possibly have orders underneath of this. Sorry, we'll get this candle out of here. If I can drag that. Underneath of that bear candle, protective stop loss at the low of the day, all that sort of scenario. These are orders that now the market is generating as it begins its new trading day. So there'd be orders above Friday's high up here, and there's orders down below here. There's break-even orders in here. So these are some of the things you want to be thinking about each day. You want to look at who's in profits. So we could look at the pound yen, for example. Yesterday, traders who shorted it in London up around 25 would have orders. There'd be orders up in this area that are for break even or protective stop loss orders. And again, even in into the US session last night, traders would have shorted this into the close around the 00. So there'll be orders there. And of course, there'll be orders above the highs of these candles as well. Just something to think about, but these profitable trades will definitely possibly, you know, they've already come back down this morning. They're probably going to clear the board from Thursday's breakout trades. Again at numbers 42.50. So we could see the market come down, stop hunt down into this level here before it either consolidates or continues even down towards the low again, which would, you know, stop hunt the traders who have kept their orders at the low of the big candle down here. So the concept is simple. You want to be looking at where is the money, and anybody who's in profit, there's orders sitting in those levels. Obviously, the high of the week, the low of the week, the high of the day, the low of the day. These are all areas where institutional volume can enter the market. And also we talked about round numbers, 50s and zeros. So here's an example yesterday of how the market throughout Asia and into the Europe London Open had a median price around a quarter level, dropped down 25 pips, went sideways, and into the US session, traded off the double zeros into the close, and is on its way to making possibly a 50 pip move down. So each time you want to be assessing which traders are in profits from the previous session, New York, London, whatever that may be, and in your mind you want to be thinking, where is the money? So traders who were short yesterday in London have already been stop hunted in the pound New Zealand. Hasn't completely gone up there, but it's not too far off with the spreads. It'd be pretty close for break-even traders. They've definitely got the US session traders who shorted the 50, the round numbers, and then of course there'd be stops and orders above the high, and even today for breakout traders. So you want to look and say to yourself, where is the money? Who's in profit? Because those traders at some point will most likely have some pain if they haven't taken profits off the table, and they've moved their stops to break even, or they've kept a protective stop loss in place, hoping that the market, they're going to ride out a bigger trend. And when the market comes back, as it did so this morning, it will come back quickly to make sure that it either catches those traders off guard, doesn't give them a lot of time to think, may cause them to lift their stops. So instead of being out at break even, they think they're going to give it a bit of wiggle room. Next thing you know, they're underwater, and they have to make a decision on whether they get out with a small loss or they hold on and hope that it rolls over. And those trades can tend to not often work out so well, and their losses can grow from there. So it's important that we talked about this yesterday, learn to take a profit, and the market will do everything it can to ensure that most traders don't make any money. So hopefully you got some value from today's video, traders. Who's in the money? Little thing that can save you some grief if you're in profit. And you know, one of my golden rules is every time the market moves at least 50 pips, have a look at what's happening, because they'll often go into consolidation. 50 pip movements are sort of an area where you want to be looking for them to either be running out of steam, 50 to 75, but in the pound Canadian, the pound Swiss, 40 to 50 pips, I start looking to see if there's something happening in terms of a change of direction, especially if we're heading into an equities open. So stay disciplined, traders, stay focused. Who's in the money? Have a great trading day.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.